Hi everyone, I'm DeFi Dad. This is episode 15 of Yield TV. All right, we are 15 episodes in, even though I think we've existed for 2 weeks, but it feels like it's been forever, you know? So today I have Lasse Clausen joining me. Lasse is one of the founding partners of 1KX. Hey, thanks for joining me on the show. And I was about to just gloat about the fact that I found that you all were bullish on DeFi before it was trendy, but we'll talk more about that today.
Thanks a lot for having me. Good to be on.
Yeah, Lasse, you're based in Germany, right?
Yeah, so we have an office in Berlin. We are, I would say, like crypto in general, we're global, and we sort of, especially before COVID, we were, about a third in Asia, about a third in Europe, Berlin, and a third like in the US. Currently, I am actually in New York City.
Oh, you're in New York. Cool.
I'm in New York. Yeah.
Yeah. No, I know you all were probably traveling a lot beforehand, and just I don't know. Now it's almost like there's some silver lining to all of this. I like the fact that our space was already very like remote oriented, but now it's the norm. There's not really like a choice in that. And I hope there's some lasting effects to it, even though I look forward to seeing you and others at live events, sometime in the future.
I've been having this thought that even though we are sort of in a bear market, it's okay to people feel it's a shrinking pie and people are going at each other's throats and sort of the whole thing being more combative. And then usually at least 2017, 16, the bull market, people were very collaborative and everyone was just like, and this bull market has been surprisingly combative as well. And so I'm wondering if it's really because we don't get to have face-to-face interactions anymore and sort of make friends and have real life experiences, right? We're just these little, things on our computer screen, and it's very hard to build up empathy and kind of things like that when you're not seeing each other face-to-face. So I'm just wondering whether it might be good actually to be back again every 8 to 12 weeks. We meet somewhere in the world and just hang out a bit and kind of build relationships in person again now.
Yeah, there is something lost right now. I mean, once you get to know someone in person, there is like a connection established. But I have been struck by how many people I've met while in the pandemic. In fact, before the pandemic, like just my own personal journey, I had never done a podcast. I've done about 10 episodes of the Ethereal podcast and moved on from that. This is new to me as well, doing like a live streaming show. It's been really interesting. And all of this has been a result of not having really other options available. And so it's been interesting. I feel like I've actually met more people while in quarantine, but I do like long to talk with people in person again.
Yeah, I'm looking forward to go back to that. I think definitely there's something more productive around it, right? Traveling, flying halfway across the world, you're going to be jet lagged for a day or two, et cetera, et cetera. But I do also think I'm just wondering whether some of that combative kind of mood is because we're not meeting face to face anymore.
Yeah, definitely. Actually, so let's launch in then to who you are and your background in case folks don't know you already. Could you tell us more about how you started the fund, maybe some of your theses, like what sorts of DeFi you focus on? Would love to just kind of learn more about those core theses.
Yeah, so I'm one of the partners of 1KX. We're an early stage token network fund. The other partner is Chris. He was my CTO in 2 software companies that we ran together. So one founder actually said this to us, and I kind of like it. Like, you guys are not VCs, you're founders with money. And so we were, fortunate to live in Berlin, be exposed to Bitcoin very early on, but purely sort of as a product nerd, wanting to know what it's like to pay with Bitcoin or pay with a phone. And Bitcoin was actually the only way to do that back then. And we actually had the first place in the world to pay with Bitcoin in Berlin's Room 77 Burger Bar, started by this libertarian Texan. Anyways, and met some people involved with Ethereum very early on. Actually sold all my Bitcoins for ETH in 2014 in the Ethereum ICO, and sort of then
wow.
had some fortunes to, end of 2016, 2017, we saw another sort of hype cycle coming, and I think they're actually very necessary for a very large transformative technology to get sort of mainstream adoption and awareness. It's a very sticky, long process. And so these sort of price-driven hype cycles are actually quite helpful because they generate a lot of PR and awareness. And so then Chris and I were looking into maybe building sort of on top of blockchain as application layer entrepreneurs, mainly mobile application entrepreneurs. And quite frankly, the infrastructure wasn't there yet. I still don't think it is. And so I guess something like an Uber on the blockchain wouldn't have made sense then. I don't know if it makes sense even today. And so we just thought that maybe as investors, we can drive the space forward. Then started the fund together with Passport Capital, Dragonfly Capital Partners, and a few others, sort of close friends in blockchain. Set up the fund in 2018 and have invested in things like, Space Mesh, Arweave, Terra. And then about 15 months ago, we started investing also in DeFi. And Nexus Mutual was the first one. We did that in June 2019. What we liked about it is sort of that it was
June 2019, you started investing.
June 2019, we invested in Nexus Mutual.
Hey, well, I know how the fund's performing based off of just that alone. So that's good for you guys.
Yeah, so what we liked about Nexus Mutual is to go into more detail on that one, is just that it's a bit like an index investment into DeFi, right? Whether Compound is winning or Curve is winning or Uniswap is winning, a certain percentage of the value that these protocols handle will be insured. And so, as total value locked in DeFi grows, so does Nexus Mutual cover grow. And we actually like to be in a position where we don't have to be that smart, right? And still be successful, right? I don't need to be able to predict whether Compound is winning or someone else is winning. I can just say, look, I'm invested in Nexus Mutual, and whatever wins on top, I'm gonna have some upside. This is also originally why I thought Ethereum was very attractive, sort of the fat protocol thesis.
Yeah.
And I think the reason why we invested early in DeFi is not because we're some geniuses that predicted all of this, to be honest, but it's really just that we have a very strong thesis that served us very well. And the thesis of the fund is that we're token maximalists. We actually have T-shirts. We printed them in 2019 when everybody was crapping on tokens.
Because this was, for many people forget, it was being shit upon by everyone. That was the trendy thing. Be a Bitcoin maxi, and then on top of it, say that tokens are completely worthless. They'll never work in any sort of utility. Everything has changed so much since then. Anyways, sorry, keep going.
And so we essentially, I think I'll try to make the short form of the thesis, is that if you have a large software networks with many different actors with different interests that sometimes are competing, you have a much better chance of aligning these interests in an open source token network than a for-profit company. And so maybe the short way to put that is, imagine Bitcoin or Ethereum had been private for-profit companies, nobody would have cared, right? It's very, very obvious. And so we think we've identified for what kind of projects this structure is really 1,000 times better than the typical company. Because also, if you extrapolate a little bit the incentives of a company, at the end of the day, it really is company against customer suppliers, right? As a company, you want to squeeze as much money out from your customers as possible, and you want to pass as little as possible on to your suppliers, right? So it's profit maximization. And so we think actually that these token networks are in a position where they don't have to rely on extractive fees. They can still be sustainable and provide economic upside for the participants without having sort of a proprietary mode and becoming sort of this extractive rent seeker. And we actually think for certain things, it's going to be really hard to compete. As a company, you're going to have a really hard time competing with those. So it's not even necessarily this sort of, at least for the fund thesis, this intrinsic motivation or drive that, decentralization is better just because it is. Yeah. We definitely feel this way, but it is actually very rational, or a very strong rationale behind it, is that it's just going to be really impossible for anyone else to compete with these networks. And you've seen, JP Morgan has their stupid coin, and I don't know how many private blockchains we've seen, and it doesn't matter. Nobody cares. The essence of creating trust comes from being a public good, from being open source, being peer reviewable, and belonging to pretty much anyone in a permissionless way.
Yeah, it's really simple when you think about the fact that when we talk about liquidity mining, it's been about rewarding those who normally are the ones that make you successful from the start, and you're giving them a voice in the protocol. If you take this completely purist view and assume that it is purely for governance, which in many cases it's not, but regardless, you are putting skin in the game. You're rewarding them. Why would someone not be even more loyal to you because of that? Now, I'm not going to say like there's obviously terrible examples of terrible incentive design, and where we're just tossing out this inflationary token for people doing a pretty meaningless task. But I think that the quality teams, the teams that have a reputable track record, like a Compound, like a Nexus, when you figure out a way to reward the right players, those players are now going to continue to do everything possible to make you successful. It's really like, I tried to explain it to my parents who can barely operate an iPhone, and I'm like, imagine that if you own a share in Google or Tesla, imagine that you can lock up that share and that it does some sort of good for the company by locking up that capital, and then you get rewarded in more Google or more Tesla shares. Like that's essentially the parallel that I could think of. And most people are used to just measuring everything they do in like US dollars. But when you are earning more Ether, when you're earning, hopefully with proof of stake coming very soon, when you are earning more of these native tokens to these different DeFi applications, I mean, it's a radical mechanism. And we're in early days. Like, all of this is so new. Like, I guess I don't know where we'll be in a few years, but there's no way in hell that this is going away anytime soon.
I think so too, because it's just fundamentally better, and it's so fundamentally better that everything else is just, it's very obvious, right? And I think we have this with like layer 1 chains as well, where the challenge was basically, or the idea was that we are giving ownership of the network to the participants that are providing the most real value to it. Now, the thing is, there should be still that value that they're providing. They should be doing that anyways. But on top of that, you basically, because otherwise they will be gone, right? If the only reward or the only value they're getting out of that service for the network is tokens, you're going to run out of tokens eventually, right? And right. I think this is probably a problem that Bitcoin will have to face at some point. But what you're doing is that you're on top of that, you are sort of really, emotionally attaching them to the network by, on top of that, it's better than free, or better than making money, right? You're making money, but on top of that, you're giving ownership over the network. You're giving some sense of sovereignty because you get to vote, right? You get to determine the fate of it. And I think that is, it's really sort of like digital cooperatives. And I think there's been some experiments around that. I think mainly with supermarkets. I think in Berkeley and San Francisco, I've seen some supermarket cooperatives. Actually, the second largest German software company, Datev, is also a cooperative. And I think this has sort of been not really successful, but I think because for large software networks, digital software networks, this is where the digital cooperative model is just an absolute game changer, and it works and it scales and it drives these additional network effects. And this is also what we do. So we're very similar in the sense of like, Silicon Valley style network investing that was very successful the last 30 years. But we do this exclusively for token networks because we do think that these incentives are, really additional rocket fuel for the network effects. And we've seen this, right? It unleashes this incredible amount of energy and a large number of people that can come from all walks of life, that are all over the globe, that are sort of aligned around this protocol and are really just unleashing an incredible amount of energy to drive the protocol forward. And if you compare that with any company, that is just has to pay people, come to work to do the meetings, and it's a drag. And if you've run companies before, and it's incredibly hard to keep good people motivated. It's so much work, and it really doesn't work all the time. And so if you compare again, right, coming back to this, it's really just unfair competition for these networks. They just have this intrinsically, organically, all this energy, all this motivation from all these different people, and compare that with a company. They need to spend money on recruitment. They need to interview these people. They need to onboard them. They need to write NDAs, right? And then maybe for 2-3 months, a person is super motivated. Then they have the first sort of level of plateau, or plateau of excitement. Their productivity goes down. Then you have to create some incentive program to keep them, happy. These networks don't have that. They're just very organically. Anybody who is driven, has energy at the moment, sees a way that they can contribute. They just come in and out and do that. And then that on the massive scale, really, absolutely, I think, unprecedented.
Lasse, can you talk to me about what do you see amongst DeFi teams that causes them to fail? Because we all tend to focus on like the Cinderella stories. Like I know I do. Like that's my whole shtick, is to show people how to use DeFi and demonstrate everything that works today that's useful now. But I'm curious from an investor standpoint, like, you're not a charity. Your goal is to invest in what is going to be successful and return money to the fund. So what do you see that is causing failure amongst DeFi teams that are failing?
I think so. We invest very, very early, and so there usually isn't that much there. So it's not many data points to judge upon necessarily. So for us, it's really sort of an instinct about the founders. Are they in it for the right reasons? And I don't know, it seems like, I think we've definitely been wrong, but we've been wrong a very, very small percentage of the times. Just kind of, getting a sense, are these founders really intrinsically driven to do this? And one way you can tell that they're not, if they started raising for a new DeFi project in the last 3 months, very likely that they're just taking advantage of the bull market. It's very easy to raise money. So for them, it doesn't really cost them anything, right? On top of that, they're going to make now a salary that they can pay themselves out. I'll try this, versus someone who's just grinding through a bear market, no matter what, with no money, very little money, and just sort of has this intrinsic motivation to do it. Because the thing is, if you don't have that, you're going to burn out, and you're not going to be able to compete with these, folks that are for 3, 4, 5 years, just every day, 24/7. They wake up and they don't want to do anything else. And so I think it's really, it's getting a sense of is that drive there? Are they gonna, are they gonna go through a bear market? And I think this is in general, like a project, it's a very simple question. Is this gonna survive a bear market or not? And it's actually, when you look at it this way, it becomes incredibly easy, because if you've got a sense for community and ecosystems and developer activity, I can tell you already which layer 1 chains are not going to survive a bear market, right? Because all the investors that are involved, they're just going to jump off. All the devs that are building on it, they're not going to stick around. And so I think that's another thing, generally getting a sense for this project. Is that going to survive a bear market? Are there, another thing is just raising too much money from not helpful people, being not careful about long-term investments, either just no lockups, or you can still do lockups, but if you raise from the wrong people, they're still just going to try to find ways to sell this as quickly as possible. And I think those would be some of the reasons. But I think that the only one that is the most generalized sort of framework to see if something's going to fail is really, are the founders in it for the right reasons? Are they there because they can raise money and they need to raise money? Maybe raising money is the only way they can have some money and some salary, right? Maybe they're unemployable, which is actually a good sign. A lot of good entrepreneurs are just unemployable. But it could also be that really the main motivation was just to sort of get a lifeline and do something, and then we'll figure it out. I think that's kind of the if there's one way to say in a general sense what causes the projects to fail, it would be the motivations of the founders.
Yeah, I like what you said about reiterating that, would this project survive a bear market? So we're in a different market now. A few years ago, we were in a very different market in 2017. 2018 is like the most depressing year. And then 2019 is where we start to see light at the end of the tunnel. And it's been really, it's been very like gratifying to watch a number of teams continue to build, like Nexus, like Synthetics, Compound comes to mind. Uniswap, I for a while there, I couldn't understand. There was quite a bit of like judgment coming down upon Uniswap, and I'm like, this guy, let's just say Hayden, from my experience, this guy has been building this thing and bootstrapping it forever. Now, did he eventually take on more money? Sure. Why? Because he built the best, goddamn DeFi app in the space. And I would argue a lot of our space doesn't exist without Uniswap today. So anyways, it's been very gratifying to watch these teams do well. Another thing you said, though, I wanted to point out is I think when you raise money as a founder, it's very important that you see a skill set in each of those that are investing in you. Because at the end of the day, I don't believe that there's a scarce supply of money that's willing to invest in DeFi now, or Ethereum, or just startups in general. There is a lot of capital out there, and so it becomes, I think, the way that I've recognized you all to be more of like market participants, and I think that's really important. And one of you now have Peter Pan on your team. He was someone who, I was watching through Metacartel and kind of got to know him there, and was like here is someone who is critically thinking with me and founders and asking really hard questions and helping me to approach problems as though he's a part of my team already. And like, that's what you need. I don't just need some, trust fund kid to throw me some money. Like, I don't want that person's money. I want the person who is essentially going to help me build. And so anyways, Peter, if you're watching, you send me some ether. I mean, after all I said there. Lasse, I had another follow-up question there, kind of related to your theses or how you all approach working with teams. Well, how do you think the role of a DeFi fund is different from the traditional VCs? And traditional is kind of a blanket statement. So let's just assume that we have a fund that is more focused on SaaS. How is that different from what a DeFi fund must do in order to be successful?
Yeah, so I think in a more specific way, what we had, so Chris and I, when we were founders, and being a founder it's not a nice life. Like, the majority of the times you're just really existentially stressed, fires everywhere. And so we had only one VC that really gave us the feeling that he's got our back no matter what. Like, I'm having sleepless night, at least this guy is someone I can come with him, whatever problem, he's going to try to figure it out with me. Whereas the other VCs, I've felt they really just want me to impress them every quarter. They just want me to give them info and stuff that makes them feel good about this investment. They can brag to their investors about this, and that's it. And that's really was their interest, and sort of have this impress me attitude. And so I think it's really important to just know that there's always going to be some fires. I think that's also allowed us to make some investments where a lot of people passed. It's like, oh, XYZ is a big problem. It's like, yeah, we know it's a big problem, but I think we can fix it. The whole point is that we fix it, and that's how it becomes valuable, right? I'm not gonna, once the problem is fixed, it's obviously gonna look much better, and then the valuation is gonna be much higher. So the whole point is that you come in, you see if the founders have this sort of scientific mindset where they're very transparent about problems, and they just actively ask you, and they're aware of the problems. They're not just like trying to ignore them, and they actively approach them in a very sort of scientific way. Yeah. And so I think that's kind of the first thing where I do think we're different, because I guess also we're entrepreneurs, so we have this really screwed up risk perception, to be honest. I think most normal people just have a very, very, very different risk parameter. So I think we're a little damaged in that sense, that we just see like, okay, yeah, I know XYZ is bad, but imagine if we fix that, imagine how good it would be then. Then more specific or more general to sort of DeFi or crypto, what we call crypto native investors, is really you're essentially an active participant in the network. Again, you're not this person that now has the right to get impressed every once in a while, but really just someone who's like, yeah, if we fix this, imagine how much better it's going to be. And if we do X, Y, Z, imagine how much more, how much the network is going to benefit. So I think, and the fantastic thing about crypto is that you can actually be very, very active in a sort of semi-independent way. Whereas I think in a traditional SaaS company, there's limited things you can do as an investor. You can make an introduction, get them in a Wall Street Journal, can put the logo on their website. Now that gets more credible. Maybe later on at a sale you might help, but that's like 8 years down the road. Like how much can you really do? Maybe introduce a few customers, but there isn't really that much room for you to apply yourself and help build out this network, build a dashboard, maybe build a block explorer, right? There's all these kind of things you can just like do. You can check with the founders and say, hey, do you have a good idea and do you think it's a good idea? Do you have some input on how to refine it? But that's kind of it, right? You just get going. And I think that's like in a more general sense what we call crypto native investors. And yeah, if you're raising money, you should make sure you get a few of those in, because it's going to be a very long, hard road. And the more support you have for people kind of more operator mindset who are tackling these problems with you, I think the better.
I'm curious, are you looking at DEXs often with teams you're considering investing in, or because of the nature of the way that people release DeFi apps at breakneck speed and because of the nature of open source software, are you evaluating more based upon what's already been built?
No, so I think most of the DEX stuff or all these DeFi protocols, I don't think they really need, I don't think they need to raise money anymore from investors.
Yeah.
Because you're essentially just forking code. You need to pay for an audit, maybe. I think that's okay. You don't need an investor. In terms of capital, maybe you needed to sort of give legitimacy, network, kind of branding, and help build the network out, maybe. But I think really what was, what we're looking for and what we did over the past 14 months, we built all the stuff that didn't exist, right? And that did actually require money, right? They need to build it for a year. They need to be funded. They need support. So all this kind of like new groundbreaking stuff. And I think now we're seeing a lot of hates in A&M, but parameter A is better than the other one, et cetera, et cetera. I don't think that really matters, especially in an open source environment where, the second you have something that is good, anybody else can use it as well. And no, it was really more, how would I say, maybe back to the example of Next Mutual. It's something that is definitely required. You could immediately see that there should be a product market fit. Yeah. The second it launched, there was an immediate product market fit. It was constantly sold out. But it's a complex system. It requires a lot of work and capital to build it out. And it requires active participants. We're one of the, if not the first fund to buy in the bonding curve to provide capital to enable the mutual to get to the minimum capital requirement, so it could start writing out and cover insurances. And another one is this one will launch soon. Is another one, but that is called Union, and so it's a union. It's a credit union. And here our thinking is also that Compound is big. I think had at that time just raised at a 200 million valuation. Yeah. But unsecured loans are about 20 times the size of over collateralized loans, right? So Compound's doing over collateralized loans, and Union was really seeing if on a protocol level you can create an incentive scheme that enables trustless, transparent, unsecured loans on the blockchain. Yep. And so that was also something that it's a financial primitive that doesn't exist yet. It's kind of pretty easy to see that there's a reasonable chance that if they get it right, it's going to be very, very big. And then is the founder just someone who's, I don't know, we just get our senses say, okay, this is a great founder. And in a very different ways. And yeah, Jacob from Union is really one of those.
What's the name of the website for that, Lasse? Is that something
that union.finance? I think it's union.finance. I think there's going to be a sort of an alpha or economic alpha soon. Cool. So people I think can get on that. And yeah, and so I think that would be one that is in the same way. Right? It doesn't exist yet. It does make sense to receive some funding to build this out and some support.
Wow.
And there you go.
Yeah, yeah. This is the best part, Lasse, of this software StreamYard is I love that we can actually like look at things like when we're talking about them versus the old school Zoom. Anything else to call out about this? This is so cool. This is what I wanted to ask you about is like, what's a project that you're invested in that folks aren't aware of yet, or maybe sleeping on just because it's not out. Also wanted to know if there's any projects that you would recommend that you haven't invested in, but you think folks are, I don't know, folks will be excited to learn about and use in DeFi. But this is under collateralized lending, right? Is that, in a nutshell, to simplify it, that's what we have here with Union?
Yes, it should enable you to borrow money without putting up any collateral, right? And this is sort of one of the criticisms of DeFi is like, yeah, if you're rich, you can borrow more money. And
Wow.
here the idea is that, you have no money, you have no collateral, but there are some signals, there's some data about yourself that enables other parties that have stake in the union. They can, and they actually also had the idea of liquidity mining before liquidity mining was something, right? So we invested like almost a year ago. So the idea is you provide capital into the union, you receive some share of the network token. But then if you use your stake in that union to underwrite someone and they actually actively borrow against that collateral, then you really start sort of liquidity mining and receiving shares.
Oh, that's cool. Yeah,
right?
yes, incentivizes
actual borrowing or lending, yeah, right.
Wow.
And so I think this is very simple but very, very clever incentive design. And it's what I also like. This seems very, in this UI seems very kind of, hey, we're friends and we're vouching for each other, but it's really what it is. It's a very general purpose protocol that leverages an underwriter ecosystem on quote unquote a layer 2, right? So whatever off-chain data you have, you can express that in a in a vouch, and that could be, I know you, I trust you with money, but that could also be someone that runs analysis on Ethereum addresses, right, in the DeFi activity, and say, hey, I think I've detected some patterns here, and I'm just going to send a non-transferable token to these addresses. And whenever they sign up to the union and they're asking, I'm going to underwrite them because it's my interest, it's my economic interest to underwrite as many people as possible that will repay, right? So that's just in one example where I might have, I might come to some conclusions off-chain and just automatically underwrite addresses. And so I think that is the power of the protocol, is that it's very, very general purpose. And whatever information you have, we've had brief conversations with a very large exchange that has a lot of just KYC and off-chain data, and they might also feel very comfortable being, an underwriter on Union because they might find that they have information that essentially allows them to do good credit scoring.
Lasse, when does this go live? Do you have any idea?
I think actually literally any day now.
Oh wow, cool. Because I think I was like half kidding, but then I realized it's actually very possible. I'm like dead set on trying to, this is going to take a while to build up some liquidity, I'm sure, but I really want to use DeFi to borrow eventually for a home. And this definitely is more interesting because it's under collateralized, like over collateralized, like that's a lot of collateral to buy a home in most parts of the world, but this is really, really interesting. And it makes sense to me. One more question on this. And sorry, I'm like putting you on the spot with everything related to Union now, just because this is cool. Do you know how this like differs from what Aave is thinking about? Like, I know they've done a lot to innovate on and think about and design for under collateralized lending.
Yeah, so the way I understood Aave is that they said if you have some collateral in Aave and you're not using it to underwrite yourself at the moment, you might as well underwrite some other address. This is how I understood the Aave under collateralized lending to work. And in Union, what you have is you have I would say more thorough. So you need basically 3 underwriters to vouch for you to be able to completely under collateralize, take unsecured loans. And the stake that you have in the union is essentially an interest stake, and the stake that you have to underwrite people actually is also a share in the entire credit union. So anything that is paid in interest is actually flowing back to the token holders.
Very interesting. Yeah, this is really cool. I'm excited for that to release. I
Yeah,
mean,
me too.
it makes a lot of sense. Like what you described is, I find in a lot of cases there will be interesting ideas in DeFi, but then it's not well communicated. I think that's part of the reason I like really wanted to like get into DeFi myself. Was I was like, all this stuff is not that hard to use, but it's been really poorly explained by a lot of teams. I think now the standard has totally been reset. Like, if you look at Aave, for example, I think their website, they do everything to prevent you from falling into some sort of roadblock. Like they've got little help messages everywhere to help explain it. And this is cool. I like the branding to it. It's simple stuff like that with the little cartoon characters that make it look a little more friendly, but it's still got that, what do I want to say? There's like a look in SaaS that you can trust it. It sort of follows certain principles of what information they give you on the homepage. All right. Well, thanks for diving in deeper with unions. That's fascinating. That's what I'm always like trying to learn at least one thing from every guest that I've never happened upon. Do you think, Lasse, is there anything that's missing in DeFi that we desperately need that you've identified?
I still think, I still think us uploading, random scans of passports and sending them to random, exchanges and banks and etc. Fortunately, it's happening less, with DeFi, and a big part of the appeal is that it has no KYC. I am not sure we might be able to do that forever. I hope so, but it's not sure. So I still think a service, an identity service that allows, I don't know, Uniswap to say, hey, this address, yes, should a regulator at some point or an enforcement agency, require, passport information, proof of residence, etc., to look into that. It doesn't mean that me as Uniswap, I have to store all these documents myself and make them available for a regulator. It just means that I have cryptographic assurance that this information exists, is up to date, and should someone, later on require that with the proper authority, here's how they can get it. I think, and again, I'm not advocating, I don't hope this happens, but I could see a regulatory environment where this is forced upon us. Yeah. And I think this would still be the cleanest way to do that, the most privacy preserving way to do that. Because right now, what regulators are forcing is everyone sends all their sensitive data to random people who obviously don't have the right data management practices. It's hard and it's expensive, right? So this stuff is basically bound to leak. And, it's kind of really frustrating how pointless the whole thing is and how damaging it is. And so I could see that an identity service at some point that provides privacy, but also, at least for the operator, gives them the guarantee that, yes, look, this is an address that operated here that should 6 months down the line and a regulator come in, I can send them here, and this is where I can get the KYC info. I don't have to deal with it.
Yeah.
That's something I would, I hope we won't need it, but I could see that being necessary at some point.
Yeah. I've thought about that too, just that nation states are going to wake up to all that's happening in DeFi, and some of them already are, and there's going to be challenges, and there always tends to be a compromise. I mean, if you exist, if your core team exists in a nation state that is giving you trouble, like there's not a whole lot of options there. But I think that's also why it's good. 2020 has been the first time where I've actually believed that teams can decentralize their governance. Like I've been before then, I'd say I was pretty uneducated on it, but also like very bearish on like, this is so many years out, it could be a decade or more. But now I'm seeing it with teams, and I'm starting to believe that it is possible to do it. And then I feel like the needle's moving in terms of pushing teams to decentralize from the start. like that we're seeing. I think with what happened with BitMEX, I think that was a bit of a wake up call that, you know, it is better to be using a permissionless application and to have a team that is a DAO that's running this. You know, like I have no doubts that there will still be challenges that we're going to run into, but I'd rather be in the place of having regulators chase a DAO than chase, you know, a centralized core team in a specific office location.
Yeah, we actually, I think for the most part, actually, all the regulatory action, especially by the SEC, has actually been very good, I have to say, because they didn't regulate the entire space and probably screw it up forever. What they did is they sent sort of selective enforcement action as a signal into the market. And what they really went after was when people were pretending it was decentralized, right? It was decentralization theater.
Right.
It was, and I saw this in 2017, 2018. People just got sloppy. They just send us a wire transfer to my, company. And from there on, I'll promise I'll launch a network and I'll create tokens and distribute the ownership, and we've really seen them go after these kind of apparent but fake sort of decentralization theaters, and Telegram was one of them. I mean, if you just have 5 core developers running the entire protocol and building it, it's not decentralized. And so I think for the most part, they've done a great job in actually forcing teams to be generally pushing for decentralization very early. You can still do that. You can raise money from accredited investors. You can build the thing out, right? Software is speech, so you have free speech principle in the US, which is very, very positive. But you shouldn't be operating this as an entity and intentionally profiting for it. And more specifically, my take is, or my intel on BitMEX is, why they're coming after them so hard is really because they weren't just like, not trying hard enough to exclude Americans and forgot to ask for passport information. They were really purposely using their privileged operator position to defraud anyone who's trading on BitMEX, right? And this is a big problem. I've heard this from 2 very reputable market making firms. And I think this is what they're really going after. And if you have something like a Uniswap, it's very simple. Anybody can look in the code. There's no way for Hayden and anybody else to kind of abuse their operator position to front run me or defraud me in any other way. It's just literally impossible, and anyone can verify that it's impossible. So I think a big argument for regulation was that, yes, as an operator, as a company, you're in a privileged position of trust, which most of the time gets abused anyways. And I think the hopeful message is that I think the regulators are kind of understanding that here you can actually get to systems and networks where that isn't possible. So a big reason of the requirement for regulation to prevent sort of insider fraud from a privileged operator position is not necessarily here. Now, it's still necessary when you have something like a cartel like EOS, right? That is basically all the block producers know each other and they can censor each other's transactions and they send each other a spreadsheet of who should vote for who, right? This is decentralization theater and you should go after that. So
I like that. Yeah. I think we all get a little bit nervous when we see regulators taking action, but then when you zoom out and you gather all that context, all of the teams that I've seen recently too, like there is clearly some wrongdoing, and I had been in the US, I had never used BitMEX. You could use it if you had a VPN. That's the way everyone was using it. But once I learned more about how they had the trading desk that was trading against it, and it just seemed like they were like the exchange was always failing too at like the worst times. Despite the immense success that they've had, I'm kind of downplaying and calling out all the negatives. I mean, I do think BitMEX is owed a debt of gratitude for like where the crypto space is. Like they've built up this liquidity for better or worse. Lasse, I had another question related to. Actually, no. You know what? Let's pivot here just for a moment. How about of all the teams that we tend to focus on and talk about here? I mean, I think all of my attention is on Ethereum. I am like consciously wanting to explore more on whichever chains present the most promising like future outside of Ethereum. And anyways, I've sort of struggled with this. Like I started to dig into Kava for like a second, but curious, do you think, is there another chain that would, let's assume that in the future, we have a universe of multiple chains. Let's assume that Ethereum is the largest landmass, which is what my assumption is, and that there could be other chains with interoperability, permissionless interoperability. What do you think has the second best chance of having like a rich DeFi ecosystem built on it outside of Ethereum? And you can also say none of them if you don't think it. It's that's definitely a fair answer.
Yeah, so actually my short answer would be none of them. It changes very much when you say a rich and you take the word DeFi out, right? A rich ecosystem. And I think this is what is interesting is when you have a chain that has sort of its very authentic kind of birth story, and they wanted to create something that a trustless technology could enable that just was absolutely impossible before. And this is why they built it, versus like, hey, I see Ethereum being successful and I'm going to go after it because I built, more TPS or something like that. And a large majority of the change we've seen especially of the Ethereum killers is really like that. And it's again, right, the motivations of the founders, like why they're really doing this. Is that because do they really see that the rest of the world is hungering for a better Ethereum, or is it, or could you just like actually join Ethereum and like help make it better?
Yeah.
And so one chain that we've, in disclosure, we're an investor in that, where I've seen that very, very authentic kind of own ecosystem is Arweave. It's something completely different. It's basically a data storage network with really a very incredible 0 to 1, something that wasn't possible before. You pay a tiny transaction fee and then it's stored and hosted forever, like probabilistically 400 or 500 years. That means this piece of data will always be available and hosted for the next 500 years. And you don't need to pay up again anymore. You can't run out of money. You can't run out of credit cards, etc. It'll just be there. And that just opens up so many new use cases that were just literally impossible before, because you have this sort of data availability problem solved. And we're now seeing like a very authentic, very young developer ecosystem starting on top of it. And some of them don't even know what Ethereum is. They don't, it's not, it's not this like, hey, look at Ethereum, we can be better in Ethereum. No, it's really, they're all centered around this completely changing the incentive structure of the web, right? And the problem is with the internet, and I think it has massive implications on our life right now, why we're sitting, why is the political climate so divided, etc., is that, take the example of Tumblr. Tumblr was a blog, and it was the first sort of GIF feed that you had that blew up. It was very popular because you just had the stream of GIFs, right? But they had around $500,000 in AWS cost every month. And so now they need to raise money. And so they raise money. Now they need to make a real business out of it, because, if you raise money, you need to pay them back. And so they create this whole sort of, thing around it. And okay, we're going to go down the ad route. And so what is the number one thing that incentivizes ad? Like how are you more successful as an ad-driven business model, right? And the entire web is driven on ads. Is more engagement, keep people on the page longer, because that means that you have more time to show them more ads. And then, what Facebook did as well, and I don't even think they had bad intentions. They're just like, look, we've got machine learning guys here. We're just going to unleash basically this machine learning algorithms that are going to turn, whatever creates the most engagement, whatever keeps people the longest on the site, give them more of that. And then a couple of years later, it turns out that, what keeps people most engaged is stuff that makes you angry, and that is fake news, and that's just horrific and creates this intense negative emotion. And now we've got YouTube, Facebook, pretty much the entire web is spewing pretty much poison into people's head just because it's the thing that gets them to sell more ads. And so I think this is fundamentally broken. And the idea, or sort of the ethos or the mission around Arweave, is really creating sustainable web app communities where you don't have this recurring need for funding, because it's hosted there and it's paid forever. And I think that's a big game changer for the web business models, and the calling, or sort of the mission of Arweave and the ecosystem is around that. And that's why it feels very, very authentic, because they're not trying to get better yield than like something on Ethereum or something, or provide like a Uniswap that has a better, I don't know, some, better token distribution. Most of them don't even know what Ethereum is. They're really just sort of around this calling of fixing the incentive models of the web, of the internet.
That's really cool to hear. You've definitely piqued my interest with, do you pronounce it Arweave? Like I know how to spell it, but I've never known how to pronounce it.
Yes, it's pronounced Arweave.
Arweave. And would it be fair to compare Arweave with like a Filecoin? Is it like similar to that?
Not really. Well, it's similar that it's sort of it's about data storage. I think Filecoin is more like an S3 on the blockchain. Right?
Okay.
You pay every month to keep something stored, and instead of paying AWS, you're paying someone on the internet. With Arweave is really you pay once and it's stored forever. So it's really about archiving high value data, important data that just needs to be in that state, preserved, forever, and needs to be served as such. And that's Arweave.
Yeah. I've definitely seen the name pop up more over the last year. Definitely from, I think it was Multicoin and Coinbase Ventures, but cool. I got to dig into that. That's really, really interesting. I love also hearing that like that. Okay. So obviously my skin in the game is with Ethereum and with Ether. And so at the end of the day, like it's been my goal the last 3 years working in this space to grow the ecosystem and to find ways to make Ethereum successful. That being said, I love stories like what you were sharing, like someone who's working on Arweave, who's excited, who feels like a passion behind like their mission. And I think it's really interesting, like it's 2020, that you could have someone working on it as a developer that doesn't know about Ethereum. I think in the coming decades, like I think Vitalik will be Time Person of the Year. I have zero doubt about that. And I hope they play this clip and say that I predicted it.
You called it early.
Yeah, I think Ethereum will be a household name. I think it's actually surprising how it's getting there. Like I live in a fairly old community, like a little town in the US. Like the community's mostly like 60 and above. And I'm amazed how many people I've met who have, when I said, oh yeah, I work with like cryptocurrencies, they're like, one of them in particular said, oh yeah, I know Bitcoin, but I put all my money into Ethereum. And I was like, oh, wow. Not what I expected. So like definitely the tides are turning. People know that name. But anyways, I think it's I think what one of the things you've called out today is just like knowing the intentions of the founders. And honestly, for me, it's only been 3 years in this space, but you can very quickly read that just by like speaking with one of them. Kane from Synthetics is just a very unique person. The guy I feel like he's got the weight of the world on his shoulders, and he doesn't let on to it. He's just going to build Synthetics whether you like it or not. And you're going to have exposure to, stocks eventually as synths. And it's just exciting to watch all of that. Lasse, I just want to be conscious of your time. Can you go like maybe another 5 minutes?
Sure.
Cool. Okay. Let's see here. Wanted to know, do you have any exposure to NFTs or does 1KX, and can you talk me through if you have any theses on NFTs or how you're thinking about the space as it's, getting more and more attention?
Yeah, so I think, or our thesis is around NFTs is that the sort of this concept of guaranteed digital scarcity is very, very interesting, and probably the killer use case of NFTs, we don't even know it yet. Yeah. It is very natural to, at the beginning, say, oh, here's that on the blockchain, right? And okay, NFTs aren't on the blockchain, CryptoKitties, and that might be right. I think what's more exciting for us is to see NFTs being used in ways that nobody even thought of. And one first example was repackaging and reselling Nexus Mutual Insurance as NFTs, right? Which Andre from Urine did. And so I think we're starting to get to the point where there is infrastructure that we can invest into that will, again, similar to Nexus Mutual or Ethereum itself, right? You invest, and then in whatever way NFTs flourish, you participate with that because it's an underlying infrastructure that any of these NFT use cases uses in some form. And so we're doing 2 NFT investments right now. that are in that realm that touch a little bit sort of a mix of DeFi and NFTs. And we're looking at a third one. So we've been watching this space for a long time. What we saw was a lot of sort of derivative stuff, right? Like Filecoin, like, oh, Amazon S3, but on the blockchain. It's like, oh, art, but on the blockchain. And we never really feel that bullish about these simple kind of X on the blockchain cases. Now, in the last months, 6 months, we've starting to see really innovative stuff of using that primitive of NFTs, a primitive of like absolute digital scarcity. And I think there will be some very interesting things built with NFTs that we probably can't even predict yet.
Yeah, I have been conscious that NFTs has been a vibrant, growing like niche community inside of Ethereum. There's all these little like niche communities. DeFi, I still consider it to be somewhat niche, even though it's grown so much. And yeah, it's been interesting, I guess, what the last 6 months here, just to see some of these use cases like the one that you mentioned with Andre start to pop up. And it's also been interesting, I guess, to hear people say, oh, NFTs are blowing up. And I'm like, they've always been kind of blowing up. Like you just, I guess you missed it. And like, it's one of those things where I think that NFTs, like one of the use cases with video games is the most exciting to me, because you don't need to have any sort of expertise and understand really Ethereum, or like you don't need to like go and read a book on Austrian economics to use NFTs. It'll just be something I think that my kids will play with and say, they'll own what they use in video games. And I think it actually could be interoperable too, that they'll take items and they'll be like cross-functional across different video games, and they'll take it for granted. They'll have no idea how like cool that is, but like I'll know better. I'll know what it's like to play siloed video games. So Lasse, anything else that you want folks to walk away from this conversation with? Like if there's, I guess, one thing to understand in the DeFi space right now, what is that?
I think in general, it's a little bit that we tend to kind of have these sort of trauma experiences of bear markets. So it tends to make a lot of people think very short term, and everybody's sort of just like, I'm whatever I'm farming, I'm dumping it immediately because tomorrow the bull market could be over and it's winter again. And I think, just sort of the invitation to think a bit more long term. And I think even just on a pragmatic side, right? Yeah, you could be, maybe you're making $5,000 basically free and you're dumping it. And congratulations, now you made $5,000. It's a lot of money, but it's not. Like, what are you going to do with that? That's going to last you 1 or 2, 3 months. And then what, right? And just hold these things for longer, allow them to flourish more, really think more like a long-term investor. And this is really how you can have sort of build life-changing wealth. It's always been through longer periods of time in crypto. Nobody, And so I think it's just that even if you get the opportunity, it's like, hey, this is free money, but what if it's free life-changing money, right? Farm these things, contribute to them. And if well-designed, you are actually providing a service and a valuable input to the network. You should be rewarded for that. But I think this sort of farm and dump culture is, I think not even in people's own interest, because if you actually collectively have a bit more of a long-term perspective, everybody will be doing actually much, much better.
I think a lot of
granted that you have some faith, right? And it's a real, we've seen a lot of farms that obviously were just sort of little games or whatever. Right. But farm something that you actually think makes sense, and then it's one of the most fantastic ways ever in history to be rewarded and to participate in something. I mean, if you really think about it, it literally is actually free money, and so I think that's something so unique in human history, and I just people comment, but literally dumping on it is sometimes a little discouraging. Yeah,
it is. It's like I definitely like that degen type of meme that people were living up, excluding, I think, some who have like always sort of owned it and it's like entertaining on Twitter. A lot of it, I assume it's fake. At this point, actually with Zapper, you can share your dashboard. And until I see someone share a dashboard and show me that net worth having increased, I think a lot of it's bullshit. Most people are just, they're saying one thing, they're doing another. It's like it's kind of like the the meme or the joke that we all saw back in 2017, 2018, where, you know, you have some really talented traders actually on Twitter, and some of them deliver very meaningful like insights, and some of them are just the person. They always sold the top, they always bought the bottom, but it's always hindsight trading, and then people pay to be a part of these paid groups, which some of them are great, some of them you're just like, dear God, these guys have no idea what they're doing. Shoot, I had one last question for you related to that. Oh, you were mentioning being a long-term investor. I really like cannot emphasize enough like what you said just moments ago. I think is one of the most important things to think about, whether you're new or old to DeFi, is don't become short-term minded. When you say think like a long-term investor, though, any tips you can share for that? Like anything that comes to mind in terms of like, what are the principles that you think about that makes you a long-term investor?
I think it's for us, it's really part of the thesis that, you know, sort of you went down the rabbit hole and clicked. It's just so obvious that, you know, it is part of a larger trend of more distributed access, more freedom, right? In terms of data freedom, talking about being locked into a silo of a gaming company, right? All these data points that throughout history, we just always move towards basically less bullshit. Yeah. And if you understand crypto and these crypto networks and what they enable the individual participant, it really is in a, you know, informal way. It's really, it's less bullshit. And if you look at how much of this nonsense is still out there and how much, you know, how billions of people are locked into services and getting, you know, almost extorted, and businesses extorting each other, and how much like zero-sum games are being played, I think just understanding and seeing, having seen sort of the light of like how some of these networks really are win-win, you know, dynamics, and how universal the human desire is for positive win-win scenarios, right? It's universal. Any culture, anyone in the world, any age group wants that. Nobody does this voluntarily, right? And so I think for us, you know, for me, it's really just having seen that, it's just so fundamentally better, and it's so obvious, and you don't, you know, it's just everybody who really understands that. And so then it's a matter of timing, and I think you might optimize a little bit around it, but actually really could not. You know, I think Bitcoin, let me see if I remember this right, but I think it makes all of its returns in 10 days throughout the year. And if you're literally not long on one of those days, wow, I think on average you lose 25%, right? So you don't know when that is going to happen, right? The components that create sort of an upward price movement are so complex that nobody really knows, except for this sort of long-term sort of, you know, kind of sentiment, at least to my mind. So I think that, you know, it's just really this understanding, and therefore this sort of strong belief that this is so fundamentally better, and it's such a game changer that, you know, how is this not 10x? How is the entire crypto market cap not 10x in 10 years? Like, I'm having a hard time seeing that, right?
Yeah.
And I guess then also
being conservative for me, yeah,
right.
It's insane, 10x in 1 year. Who knew back in January when we were just hitting 700 million and then finally 1 billion? I mean, that was a huge marker of success. I mean, it felt like the entire space was, you know, just virtually high-fiving one another. And now you look forward about 10 months and we're up over 10x. I think we've hit 11 or 12 billion recently. I mean, it's just, and the markets are down too. The general like crypto markets and DeFi, like the token prices themselves have drawn down. I think it's remarkable that we've held this outrageous total value locked while all of that is happening, and it's a testament to the fact that there's long-term users here. Like we're no longer counting a few thousand users, you know, in 2018 and trying to justify like why the hell you know, can there be this few of users of Ethereum applications? Like it was a pretty depressing time for those who just couldn't accept that reality. It's like, no, we are nowhere where we should be, and the markets are overinflated. Now it feels so much better to look at it and say, I have no thesis really on the governance tokens themselves, but I just look at the market the way you do from that macro level, and I'm like, this is crazy how like transformational all of this is, and how few people in the world know how to use this. Like we have so much room to grow.
Right, we had 15 billion value locked in DeFi.
Oh my God! Wow, I
right?
just missed that
there's a duplication ratio of around 37%. So I would say the true value is 9.2 billion, 9.3.
Wow.
But that is incredible, right? We're 1 billion. Remember when we're celebrating, like you said, and then exponentially it just kept growing and growing and growing. So I think, you know, you'll be a unique genius in timing this exactly. This is why trading in and out doesn't make any sense. I think it's really, there we go.
And here's this is ETH locked too. Like we were, I mean, this is a huge success with just USD. And if you consider too that there's some double counting, there's also a number of apps that have yet to be listed here. But then when you look at ETH locked, that to me, that's the way that I really measure success right now. The more ETH that gets locked up, the more like I want to say,
like, as an Ethereum holder, right? Yeah.
Yes. Yes. If you are trusting your Ether being locked in these smart contracts, like you got to be someone who's not a short-term user.
Yeah.
One book I'd recommend for anyone out there is The Psychology of Money. A lot of what we were talking about here, even at the end, it plays off of ideas that I feel like were affirmed in this book I just read. And it's like 20 chapters, super short. They're all short stories of like the psychology of money. And I think that while I focus a lot on how you use DeFi, I think like what you're talking about, Lasse, like I think it's important to understand, you know, the history of money and how people have become very rich and also lost all of that wealth. And one of the main takeaways in the book was that there's a lot of people that will get rich, but very few stay wealthy because they live beyond their means and they find ways to lose it. You know, it's can be luck for some falling into some money, but there also can be that bad luck that helps you to fall out of that. So hey, thanks again for joining me. So much fun. We'd love to have you back sometime. Again, I
would love to. Thanks for having me. This was great.
Yeah, I've really admired for some time, like, again, how you all were very bullish on DeFi when it wasn't as trendy. Even like a year ago, I mean, it was an exciting time, but I felt like that's when people were starting to catch on. And now I think the token maximalisms, like that alone, like I didn't realize you guys had that as like a mantra. And yeah, you were definitely oddballs back then. Now you're looking a lot smarter to everyone who doubted it. But everyone follow Lasse at this handle on Twitter. You can follow their fund at 1KX Network. I would also look up Peter Pan, who recently joined the team, and I've always just been very bullish on him as a person. And gosh, I'm trying to think. Tomorrow we'll have someone joining that I can't remember now, but I will look it up. We'll be back, I guess, at 12 p.m. Eastern. So thanks for watching, everyone. And I'm going to hit that loud video one more time. Bye.